Monday, February 12th, 2018, Monaco 64, home of alternative economics and contrarian views. So it's around 7:30 a.m. London, so still quite early. I'd like to talk about the markets and a few things I saw over this weekend. One of them is a video about the markets and what's about cycles. The other few things are a couple of articles on Zero Hedge that I've just seen. One about JP Morgan and Bitcoin, and the other one about the bond market and treasury yields. So first of all, let's have a look at what the markets are doing. Spot gold is up $7, which is quite surprising. Usually you see at the start of the week, especially when you had a prior week that was weak, you see gold continue to go down. So I was surprised to see it up this morning when I woke up. It's at 13.23, up about $7 or 0.5%. Silver is at 16.46, up 12 cents or 0.7%. The Dow is up again today. It's up 175 or 0.75% at 24,370. S&P up 17 or 0.64%. Nasdaq up 40 points or 0.6%. Currency-wise, the dollar is a tad weaker. It's at 90.10 or 0.21% lower. Currency-wise, we've got the pound up 25 pips at 134.85. The euro 122.78, up 0.2%. And the dollar is down a little bit against the yen. It's down 15 pips or 0.14%. So fairly quiet markets so far. Dollar slightly weaker. Treasury yields are a little higher this morning. We are at 2.88 right now, the 10-year yield. So we're right on the highs of the year so far. Of course, the 3%, just above 3%, the key resistance level. And before I go into the articles, I'll go into the video that I saw. I highly recommend it. It's Greg Hunter video published on Saturday, February 10th. And he interviews Charles Nenner. And the title of the video is Buy Gold, Market Crash Coming. And why am I talking about this video? Well, because I respect Charles Nenner. I've been following him for quite a few years. He follows only cycles. And he's been right a lot of times. Sometimes cycles, of course, don't come about exactly on the date that people call them for. It's like it's like nature. Sometimes in the winter you get a day that's fairly warm. Things are not perfect. But Charles Nenner, I've remember, since last year he's been calling for a market top, and now he thinks we're going. This is it. That we won't see a higher high in the stock market. The top was, beginning of 2018. He said it went. He expected to be at the end of 2017. He said it dragged on for a few more weeks. The rally in the stock market. But now, most interestingly, he sees a long-term cycle with the Dow bottoming at 5,000 in 2020. So that's what he sees. The interesting thing about Charles Nenner, he doesn't. He just looks at the prices and what they do. He doesn't try to figure out why things will happen. He says that we will know why that's happened. Once things happen, he thinks it could be because of a war cycle that he follows as well. But if it doesn't happen in the next 2 to 3 years, a big war, then it won't happen. But He argues that the only way to try to figure out what's going to happen in the future is to look back at cycles. So what else does he talk about that I was quite interested in? Well, one of the most interesting things that he talked about is that he thinks the dollar is ready to bottom very soon, maybe in the next 2 weeks or 3 weeks or so. He says there might be a little more downside or to the dollar, but his cycles are telling him that the dollar is going to bottom and a dollar will rebound and might even make a new high, and you might think, wow, gold's going to get hammered. No, he thinks gold and the dollar are going to go up together. So, and Greg Hunter was surprised, but I'm not surprised because I've seen that before, the dollar and the gold go up together. I think it was around 2005 to 2007. There's a period there where the dollar and the gold price were going up together. Greg Hunter again asked him, do you know why do you think that's going to happen? He said, I don't know. It could be because there's a major war, and what do people want in a war? They want gold and they want dollars because the American war machine is the strongest, I guess. So that would make sense. What else does he talk about? Well, he talks about the bond market, and I've been covering the bond market since we made a low in July 2016. And, I've been asking, is this the, beginning of the bear market? And it has been, I guess. We've gone from 1.33 to almost 3% now. But he argues as well that the bond market, he called the top in the bond market or bottom in yields as well. But he thinks we're getting, the cycles are telling him that government bonds, at least, or treasuries, are actually going to turn. And I know we have a lot of news about the deficit and the debt, but that's already been priced in, as he says, sell the rumor, buy the fact. He talks about that. So, very interesting. You need to keep an open mind about things, in my opinion. And so what do I think about yields? Well, I think they might go up a bit more if we don't break through 3%. And it turns around and goes back down, then, Charles Nenner has a point about the cycles. But, yeah, he's out of the stock market, and he's long the precious metals. He's long the bond market, treasuries. So, and he's short the currencies. By currencies, he means the euro, the Australian dollar, the British pound. So very interesting video, and I recommend it. I'll put the link below the description. What else? Yeah, there's an article here on Zero Hedge about Bitcoin, and it says JP Morgan publishes the Bitcoin Bible. And it says here, we have officially gone from Bitcoin is a fraud to cryptocurrencies could potentially have a role in diversifying one's global bond and equity portfolio. So this is very interesting because here you have JP Morgan actually saying that cryptocurrencies and altcoins could become an asset class. And I think that will only be helpful to the cryptocurrency markets. I think it's a good sign. And the other article I saw is the budget director of the Trump administration, Mick Mulvaney, says that admits interest rates may spike on soaring deficit. So this is a Zero Hedge article as well. So it says here, in a bizarre warning coming from President Trump's own budget director, one that could accelerate the sharp market sell-off, which so infuriated Trump last week. He tweeted about it on several occasions, lashing out against those who sell stocks on good news, claiming it's a big mistake. Mick Mulvaney warned that the U.S. will post a larger budget deficit this year and could see a spike in interest rates as a result. Well, this is a bit more a case of trying to justify events. I think the Charles Nenner might be right. I think all the worries about the U.S. budget and the debt might be priced in. Who knows? Maybe we will see a drop in yields. Maybe we'll go to 3, make a double top and come back down. Maybe, but I don't think we're going to go and break. We could go break the low of 136, and that means that the bull market in bonds is still not over. But I have a feeling it won't, and it will take longer. So, and the other thing as well, does it really, I don't think it really matters what, I think we need to focus on the price action, and, you know, it doesn't really matter the politics, because as Mr. Nenner says, the cycles are in and the market will do what it does. It doesn't matter about the news too much about politics. What else? No, that's what I wanted to talk about. But the most interesting thing was what he said about gold and the currencies. So for all of the people who have been frustrated with, you know, outside the U.S., the fact that gold, especially before last week, you know, from December to the beginning of the year, gold did very well in dollars, but not well in other currencies. I think, as I said, all currencies are fiat currencies. They're not any better than the dollar. So yeah, that's it for now. So if you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet, and you can also follow me on steemit.com and on Twitter. And I'll talk to you later. Take care. Bye.